when it comes to wheat. Blue Line Futures, Oliver Slope. Okay, there's the big question. Still optimistic?
Still optimistic, but certainly some caution flags starting to arise. You know, seasonally, the back half of October is when you can start to see this market soften up a little bit. And if we do see some of that war premium come out of the market and we see consecutive closes back below $6, potentially that starts to spur some long liquidation from recent buyers on the move higher. So I would say cautiously optimistic here in the wheat market. Corn and soybeans, those are different stories. Corn, I think we're pretty neutral on. I think we see a little softer price action this morning, potentially a buying opportunity so long as we can defend support from 406 to 408. The demand side of the picture has been strong there, and I think will continue to be underlying fundamental support for the market. Soybeans, on the other hand, I think there's still a lot of concern that we could potentially see downward pressure on that end. Friday's WASDE report, just kind of a reminder that we've got some big ending stocks to chew through on that front. And if Brazil and South America as a whole come out with a good crop this year, that's going to be a tough hurdle to get out above.
Okay, I want to throw this into the conversation as well, talking about the U.S. dollar index. And it kind of plays into what we've been talking about here on the grains, but it also talks about what we're going to bring up in a moment, and that is livestock futures. Speaking of livestock, we'll take a break, be back in a moment. Market Day Report continues after this. And that's coming off of a pretty impressive close in the hog market on Friday. Let's bring back in Oliver Slope. And Oliver, first off on the hogs, but then we can kind of work in commitments of traders as well.
Yeah, the lean hog market has exceeded our expectations, that's for sure. Had a really strong close on Friday, giving some of that ground back here in today's trade. And ultimately, I wouldn't be surprised to see this market maybe settle in a little bit more to the downside and trade into a little bit of a range, which is ultimately kind of what we're looking at for the cattle complex as well. We've had a nice, strong rally to the upside in live cattle and feeder cattle through the month of September and so far to start October. And a lot of that strength, I think, has come on reinvigoration of fund participation on the back of recent strong economic data. About a week and a half ago, we got strong non-farm payrolls, lower unemployment number, and you got funds interested in being long the market again on the idea that the consumer is going to remain resilient. Last week's commitment to traders report showed funds were net buyers of about 10,000 futures and options contracts, expanding their net long position to about 78,000 contracts, which is the largest since July. And if we continue to see strong economic data, potentially they add to it. But once you start getting funds long, 90+ thousand futures and options contracts, you open the door for the risk of long liquidation if we do get some fundamental headwinds.
And do we need to keep an eye on what's happening with the equities as well?
Well, the equities are feeding off of the economic data that we talked about. We've got a strong open to start the week in the S&P. We're up about 40, 45 points there. And if that continues and the stock market continues to climb to all-time highs, again, I think that lends hand to the idea that fund participation is going to pick up on the long side. If that does come to an end and we see a retracement in the outside markets, that potentially opens the door for long liquidation with the funds, getting pretty aggressive here. So it'll be interesting to see, especially with an election just a few weeks away and some economic data around the corner.
Oliver, so good to see you. Come back and see us again on Thursday. Oliver Slopes with Blue Line Futures. And